Welcome to Dig Deep, the mining podcast. In this podcast, we go deep into mining news, hot topics, and live interviews with mining professionals and leading figures in the mining industry. Introducing your host, Rob Tyson, founder and director of Mining International and Mining International Executive, a leading global mining recruitment and headhunting agency.
Hi mining community, welcome back to another episode of the Dig Deep, the mining podcast. And today's guest is Gordon Stein, who's the CEO of CleanTech Lithium, whose mission is to be the leading supplier of clean battery-grade lithium for global energy transition by advancing direct lithium extraction technology and supplying green lithium to the EV and battery manufacturing market. Gordon has over 30 years of expertise in the energy, natural resources and other sectors in both executive and non-executive directorship roles. A chartered accountant, he's worked with startups and major companies, including board roles of 6 LSE companies. And he's here today to tell us a little bit more about the company and the history of the company, the technology behind CleanTech and financing options for technology companies and a lot more. Before I start this podcast, I just want to give a shout out to our sponsors, Hawcroft, who are leaders in property risk management in the mining industry since 1992. They offer insurance risk surveys, construction risk reviews, asset criticality assessments and more. Working across 600 sites globally, Hawcroft supports all areas of mining resources and minerals. So if you're looking for property insurance risk and management services, then please visit their website at www.hawcroft.com. All the details are in the show notes. Gordon, welcome to the podcast. How you doing?
Well, I'm much better considering you promoted me to CEO and considering I'm the CFO. But anyway, you're
sorry. I do apologise. I thought I did say CFO, but thank you for clarifying that.
Yeah,
so
no
it's
problem.
the CFO. Yes, welcome to the podcast. I wondered if you can obviously tell us a little bit about yourself, a little bit about your career. As I mentioned, you've been in the industry for 30 years and you're a chartered accountant by background. So just want me to just give us an overview of your career so our audience knows you.
As I say, I'm a chartered accountant, but I got into the energy sector quite early on in the mid 80s. It was quite a long time ago, and then since then I've worked for various different large companies, smaller companies in the natural resources and energy sector, and I've lived in some weird and wonderful places: Tunisia, Ukraine, Turkmenistan, Venezuela, Trinidad, Madagascar. So I've kind of done a tour of big and small projects. So I've kind of built up an experience over that, and 5 different LSE companies as CFO. I did an interim as well in Sierra Leone at one point. So I'm now working in Chile and really enjoying it, and so look forward to telling you about it.
Yeah.
Okay.
Those that listen to the podcast, there's a little bit of background noise, as you can hear. So Gordon, I just wonder where you're actually recording this from.
The Institute of Directors in London. That's where I kind of plonked myself today. I've had various meetings, but yeah, it's a pleasant environment and nice old building. But apologies if there's any noise.
Yeah, no worries. Just I thought I'd let the listeners know, just in case they can hear background noise. So yeah, just wondering you just tell us a little bit about the company, CleanTech Lithium, a little bit of the history around obviously the company since the startup.
Yeah, the company was formed in 2017 by 2 entrepreneur come businessmen who've been pretty successful in different guises in the natural resources space. One's a Chilean national who's lived in America for 12 years, doctorate in 2 different places in America. And he got together with an Australian entrepreneur who was really looking at the same time as he was at the lithium market. I mean, they looked ahead and saw a really significant increase in demand for lithium, and it's happening. You're looking at 20 to 30% increase year on year in the demand for effectively critical mineral resources for the electric car battery charge and also for things like battery storage. So they set up CleanTech with a view of finding assets in Chile where they felt it was a good mining jurisdiction. They've got a long history of lithium, but they wanted to do it in a different way. They recognized that in China in particular, they were far ahead of the West in terms of using technologies that have existed in other industries for decades. For example, DLE, which I'll talk about, direct lithium extraction. Effectively, the process has been used in the uranium industry for 40 years, effectively using it. And so they went out there to see how can we access lithium projects or material lithium projects, and then use them to drive forward a cleaner way of doing lithium. It's probably worth mentioning that if you look at lithium, there's two real historical ways you've got lithium to supply the market. You've got the hard rock projects in China where you're effectively mining huge resources, sticking it on a ship, transporting it to China. There's no processing facilities in Australia, so it all goes to China. 95% of it's thrown away, and the 5% is then refined into lithium. And it's a pretty intensive, not particularly environmentally friendly method, and it's costly. And then you've got the evaporation ponds in Chile. These are, basically taking brine out of the subsurface and then putting it in these ponds, mile after mile of ponds, and letting the sun evaporate. Not particularly good on the water, big footprint. It's not particularly effective because you only get about 40% of the lithium out, and you end up with a sludge. You've got to process it, and you're losing water in an area of the world where water's relatively scarce. Whereas direct lithium extraction, because of the supply-demand curve changing, you've effectively can clearly see in every analyst it's going to be a dearth of supply over the course of time. And really from 26, 27, 28 onwards, there's a debate about when the supply-demand curve is going to start going further and further apart. There needs to be more supply of lithium. And direct lithium extraction has come more into play in the last few years. Why? Because you can use this technology, which is again used in other industries. What you're effectively doing, using a resin to do in 2 days to extract the lithium from underground brine sources. In 2 days, what it would take a year and a half in evaporation ponds. And you can do that in a particularly clean way. You're effectively bringing the brine out from the subsurface using resins. These are tiny little beads. They capture the lithium. They leave all the other nasties, well, most of the other nasties behind. And you end up with a product which you can then take to a downstream processing facility and produce lithium carbonate, or that can be going to lithium hydroxide. It's a very quick process, and actually 2-3 years ago the world was skeptical. Is it going to happen? Is this real? Is this fancy technology? It's happening. I mean, you've got 6 or 7 projects in China. People can't see them, so they don't believe them. But you've now got 2 major projects that are happening now. The first real industrial commercial project started producing lithium using DLE in Argentina. That's Eramet's project in Argentina just before Christmas. It's happening. So our company now has got 2 major assets. One, it's a flagship project, and our intention is to bring that onto production within the next 3-4 years. We're pretty well advanced on that, and we're pretty excited about where we're going.
So obviously you spoke about obviously the technologies. I just wonder if you can just tell us, I suppose, a little bit more the uniqueness of the DLE technology, I suppose compared to other technologies that are out there.
Well, rather than a technology, it's a process. You're effectively using a very, very small resin. Think, salt size resin, and there's thousands of little holes in it. And what you do is you bring the brine out from the subsurface. In our case, we have subsurface aquifers 100 meters underground to 500 meters underground. So these are shallow aquifers, 4,400 meters up the mountains. There's nobody within 100 kilometers of our site. They all live further down the mountains on the transport corridors. So we can bring it out, put it through a facility in these big tanks, and we built a pilot plant and actually operated it from last year, and we've produced quality battery or lithium carbonate, which we believe in the next month we'll be able to evidence is battery grade. What is battery grade? Anything more than 99.5% grade is effectively Chinese or the rest of the world battery grade. So through a process that takes 2 days instead of 18 months, you can produce lithium carbonate in a relatively green fashion. We will use 100% renewable power. We've already got proposals on that. Because Chile has got 60 to 70% of its grid today using renewable power, and we will re-inject the spent brine that is with the lithium taken out back into the aquifer area and the subsurface in a way whereby you're keeping the table flowing, and so it's extremely efficient. You get 99% of the lithium out, and compared to 40%. And it's not particularly expensive. You're looking at $4,000 to $5,000 a ton, and even today with the depressed lithium price, $10,000 a ton, it makes money. So the world is switched onto that. There's I was looking yesterday about a dozen to 15 projects around the world, whether it's in the US, in Germany, in Europe, using DLE, and it's really they're all kind of doing it slightly differently because you have to adapt the DLE process to your brine, because our brine is different to the brine in the US, different to the brine and so on. So then it's a clear process of trial and error, but we've now produced battery grade lithium through our pilot plant. This is an industrial scale pilot plant, which took us, the better part of 2 years to order and get construct. Why? Because you have to do this correctly. If you're going to raise the funds to keep your projects moving forward, and we'll touch on that in a minute, you have to have your fundamentals, and then we can talk about that in a minute.
Obviously, with the demand of lithium set to grow, as you've obviously alluded to, what financing strategies would you say are the most effective for junior miners looking to advance DLE projects from exploration to production?
I thought about that question this morning. I'm not sure it's a financing strategy. It's your operational strategy to get the financing and land the financing. And you're talking, in our case, you're talking anything from $400 to $500 million. That sounds a lot of money, but the bottom line is you do the economics on the resource we've got. We've announced a resource of 1.665 million tons at Laguna Verde. That's enough for a 20-year life project, 15,000, 20,000 tons a year. That throws off money, and so the economics are extremely strong, even at today's prices. But it's all about getting your fundamentals right. Nobody is going to fund your project. The best financing strategy in the world, unless you've identified and delivered a resource. We've had 3 to 4 years of drilling campaigns, and we've got a resource by one of the top houses in the US, evidenced that. We announced that a couple of months ago. You've then got to have clear independent studies done on the economics. We've had a scoping study done that was announced a year and a half ago. Pre-feasibility study is about the fundamental economics of your project. We're within a month, 2 months of completing that. That's a $3 million project in itself, putting together a jigsaw piece of where's the power going to come from, the water, what's your resource, what product are you going to deliver. All of those are coming together really nicely. So you've got to get them in place. You need to have, got the support of the Chilean government. We're well advanced on that in terms of allowing your project to move forward. And then you move into other things like your environmental permits and so on. So the better part of 3 or 4 years since I've been with the company and we restructured the company and we listed on AIM in March 22, we've focused completely on the fundamentals, because we'll be in a position to go to financiers. And who are these financiers? You're talking about banks. You're talking about strategic partners. These are car companies, battery manufacturers. You've got international traders, all looking for product, all looking for supply in a demand supply problem. So we have got 5 or 6 major entities under NDA. There'll be more. And why is it a good time now to be talking about this? We believe we'll have a line of sight on the license area in terms of driving forward on our project with government approval within the next 4 to 6 weeks. End of March, the government said they're going to confirm whether we move into that fast track process. The PFS will be following very soon afterwards. And actually, all the strategics we've talked to, and car companies, batteries, etc., they all want to see the PFS. Show us the project, how you're going to deliver it, what are the economics, and then you start talking to the financiers. By the way, the other thing we've got as well is product. We can send product. This is what we can deliver for you. And that's because we've got a pilot plant, we've operated it, we've announced the market, battery grade lithium. So we're in a pretty strong place for those conversations with parties who want to secure supply. So we're at a really nice inflection point now where it's all just coming together. All the jigsaw pieces are just nicely coming together. And then what's the financing going to look like? It's going to be a cocktail of financing. If you look at one of our peers, Vulcan Energy, they've raised equity funds, they've raised debt in the market, they've received a 500 million euro EIB loan. They've just announced a deal in Australia for export credit facility of $150 million. So all of these pieces of the jigsaw build up towards a capital program, and we'll be talking to all of those using similar advisors to the ones that Vulcan have done. And you've got in the US the Smackover project. US government had announced, whether it's still relevant or not, I don't know, had announced a 225 million US government grant to get this project on the ground, because they accept, it's a critical minerals are important. So we're in a good place to bring together that cocktail of funders, and it'll take time, but the economics of the project. But once we've got the PFS, and we've got product, and we're very close. We'll be having some very interesting conversations with parties, and some really interesting parties have already been to site, looked at things, and said, "Come and talk to us when you've got your PFS."
How have the capital markets responded to the rise of the DLE technology in obviously lithium extraction? And what would you say the key financial factors do sort of investors consider when they are sort of backing early exploration to development projects like yourselves?
I think in the early days, maybe 2, 3 years ago, there's a lot of doubt. Is DLE, is that fancy new technology, is it going to work? But you can actually see it working now. You've got Vulcan moving forward. They're already starting the development in Germany. It's $1 billion plus or euro plus project. You've got Eramet, came on stream before Christmas. That's an industrial scale pilot plant. Full scale commercial plant. So DLE is working. It's happening now. And what will happen is as the demand starts going again and the price starts moving up, there'll be more and more of these projects come on stream. So we're in a really good place. So I think the markets have been skeptical, but I think now they'll start to look. And another key driver is we can be economic even at these low lithium prices, whereas you've got your hard rock projects in Australia shutting down or going into mothball because it doesn't make sense to run at a loss. So we're at the right end of the cost curve. We've got a good timing issue, and I think that with the market changing and the supply demand curve going to be going into deficit, it's going to get really interesting. So funding, I'm not particularly concerned about the funding. It's how do we best put that mix together, because it will be a cocktail and actually give you an example. If we were to send, we've had an indicative proposal from KfW, German investment bank linked to the German government, go out and find projects that will help the German industry, and particularly the car industry. And if we were to do an off-take agreement with I know I'm not going to mention the name, the German manufacturer, for 8,000 tons a year for over 8 years, for example, just do the maths on that. They will provide up to $300 million of funding to support that. Why? Because that guarantees a supply of product for Germany, for an industry where they need that sort of support. So that's just an early conversation. There's other examples of the KfWs. I mentioned Australia. We'll be looking, and we'll be appointing advisors in the next few months. We've got a couple that we're talking to, and these are the guys that can open doors on the financing. So it's going to be an interesting year ahead.
I suppose there's many people where many governments are obviously are pushing for domestic lithium supply chains, obviously all across the world. What funding mechanisms or even grants or even policy incentives are available at the moment to support obviously the development of DLE based lithium projects? Have you got any examples that you can share with us?
Well, lithium's only in certain places around the world. You've got it in the US. You've got one or two snippets around Europe. South America is the key place, and Australia. Australia's more the hard rock, so you can choose to continue funding those. But if you're looking at DLE, really it's fundamentally the US and South America. Argentina, Bolivia, and Chile in particular. And those governments don't necessarily have the resources to support the projects, but there are other countries that do. I mean, up until the new U.S. administration, the Inflation Reduction Act, Chile's a free trade agreement country with the U.S. So in theory, you can access funding for projects in the U.S. I mean, I mentioned Standard Lithium had a $220 million grant from the U.S. Department of Energy for their project in Arkansas. So. And Germany has been supporting Vulcan in driving their project. Why? Because Germany needs supply. So you can look around the place, and there's other places where I mentioned Australia. Vulcan has got an export credit facility because they're using some technical support facilities from Australia. So $150 million. So you put all that together. Governments have obviously got constraints on their funding, but they also recognise that critical minerals are absolutely critical to the future, and unless you want to get them from China, you've got to source them yourself. So Europe is starting to wake up now to that situation a bit more than maybe they did.
Obviously, as the DLE process is still obviously relatively new, how are banks and institutional investors assessing its obviously commercial viability? And what can, I suppose, project developers do to de-risk their projects for lenders?
A lot of what we're doing. I mean, it's back to your fundamentals. Banks want to see a bankable feasibility study. They'll agree lending terms. I mean, I'll give you an example. Our chairman, Steve, was chief exec of Kayawasi, which was the second biggest copper mine in the world. He developed it in a number of years ago, and he put a consortium of banks together to develop that with major equity partners. So you had a couple of Japanese major houses. They brought the Japanese banks to bear, and you had a consortium of a dozen Japanese banks plus the equity providers with offtake agreements and providing a $1.75 billion project, which became the second biggest copper mine in the world. So that's your cocktail of pulling it together. But unless you've got the fundamentals in place, your resource, your product, you can evidence government support, you've got your EIA, your environmental approvals. If you've got all of those ingredients in place, you're in a good place for conversations with the banks. And it's all about critical mineral supply ex-China, because China dominates the world of critical mineral supply, and I think we all understand the risks associated with all eggs in one basket in a China source. So I think we just keep plugging away at just getting the fundamentals right. This is 30 years in the oil and gas business and natural resources. It's always the same. Follow the whole trail of exploration, production, appraisal, testing, and then putting all your technical data together, and then you talk to the banks and the financiers. The financiers will come. It's a question of making sure that when you approach them, you're ready and you've got the data to support what you do, and you de-risk it in different ways with hedging strategies and so on. And you build that process together with those financial institutions. And I'm looking forward to those conversations. It's a bit of a juggling act, but I mean that's the name of the game.
Certainly is. Given obviously the cyclical nature of obviously commodity markets, how should lithium companies obviously developing critical minerals structure their financial models to obviously withstand pricing fluctuations and ensure long-term profitability?
That comes down to working with your financial advisors. These are the companies who can open the door and bring you those major entities, whether it's banks or international traders and so on. And your models, if you look at a banking model, let's say the lithium price is $20,000 a ton today, your banking model will be 14, 15. The banks automatically de-risk it by saying could go down. There'll be hedging strategies in place, and obviously we'll be looking at partnering with companies of scale. We're talking household names here. You think car companies, battery manufacturers, whether it's South Korea or it's China or it's other places. And then you've got your international traders, and they want product because they'll sell product for profit. So it's that mix, and in your models you'll have to have some pretty good models, but the banks and the funders who come to you will de-risk it in their own way. But even I'm going back again, if we started our project today, we would make money today, and this is at the lithium price probably it's its lowest been for a long time. And you can just see the green shoots starting in Australia. You've seen companies in the last week lithium companies starting an uptick as a sentiment change. I mean, Liontown was up 9% last Friday. I mean, that's a major project on stream. So I think the market's changing, and we'll run our project economics a lot of different scenarios. Keeping your cost base low. If you keep your cost base $4,000-5,000 a ton, anything above that is return for investors. So I think we're in a good place now where we've got all the ingredients, everything's coming together in the next 2 or 3 months, and then we'll be kicking on, and I'll be running and talking to people with deeper pockets than I've got.
Yeah, certainly. Lastly, what's the short to medium term outlook for CleanTech Lithium? And is there anything else that you want to share with our audience?
Well, we did a raise last week, and we've had this fantastic support from nearly 30 of our shareholders. I mean, we basically did it. It wasn't a particularly big raise at £2.5 million, but it gave us some running room, because our plan has been for the last couple of years is to dual list on ASX, Australian Stock Exchange. Why? We believe that the Australian investor base and the analytical base understands minerals better than AIM does. It just does. And you've got a much bigger retail investment base. So plan is to list on ASX and do that in the next couple of months. I mean, documentation is pretty advanced on that. And in the meantime, in the lead up to that, we're going to be moving forward on our PFS. That's a major piece of work. And we're putting out to the market, saying this is what it's going to cost to run our project. This is how we're going to do it. We've got the government announced at the end of March in Chile, where we believe will be one of the first 6 projects given the go-ahead to kick on. We've got product coming out of our downstream facility and our scale. And we'll have a lot of product we can send to your German car companies, your trading houses, and so on. People who want to have a look and say, right, here we go. We can sell you this. Do you want it? And if you do, then come and talk to us. And so the next 3 or 4 months is going to be really interesting as we kick on. And I think the ASX itself, I'll look at some of our peers, won't name them, but some of our peers have got 1/3 of our resource and are 3 times our market cap. Work that one out.
That shows you're undervalued.
Something doesn't kind of gel. And we believe, and we've got 25-30% of our shareholders are Australian now, and we believe there's a ready market there, and we hear loud and clear. If you get on ASX, you'll get a re-rating, and you'll allow yourself to move forward. And I think we're pretty well placed at the moment.
Yeah, Gordon, thank you for your time. Really appreciate you taking the time out of your busy day to give us an overview of CleanTech Lithium. And obviously discussing what the DLR process is as well, and giving us an overview of the financial models of what you're doing, the technologies and the process, and updating us on the lithium market. If our audience wants to reach out to you, if they've got any questions, want to follow obviously the story, how can they go about doing that, and what social media platform channels are you on?
I will put someone out through you, and then they can contact our communications people and then go from there. Happy to chat. Yep.
We'll include those in the show notes anyway, so for easy access, so our audience can follow your journey. Probably be good for maybe to get you on the podcast later this year once the PFS is out there, and you can give us an update on what the plan of action is next. So yeah, more welcome to come on later this year.
Look forward to it. Great. Appreciate that. Thanks for the time, bro. Okay.
Yeah, thank you, Gordon. Thank you for listening. I hope you enjoyed that episode. As always, appreciate your continued support. Please keep sharing these episodes far and wide. We want to educate our mining industry. And obviously, lithium is an important critical mineral. And obviously, Gordon's just explained a particular process to make it cleaner, which is obviously needed. So thank you for listening. Until next time, happy mining.
Thank you for listening. Remember to reach out to Rob via the show notes, and be sure to subscribe and leave a review. Until next time, happy mining, helping each other to improve the mining industry.